Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's lecture, guys, is on fear-based trading. It's more of a psychology lecture, an emotional lecture. Why? Because you need it. You absolutely guaranteed, positively need it. Many of you out there are selling too soon. You're not taking your stop losses. You're over trading. You're risking far too much money. You have expectations that are grossly exceeding your experience. You're coming in thinking, oh, I'm going to turn $500 into $1 million. You're coming in thinking you're going to get rich in 3 months, 6 months, 9 months. Where else can you do that anywhere in the world? The answer is nowhere. Okay, so why would you think that in trading? So we're going to talk a little bit about charts, but mostly we're going to talk about psychology today, because I think many of you out there, you're a fear-based trader. Your fear of loss is far greater than your hope for gain. That need to be right in you, that FOMO, that ego is super duper duper strong in you. And yet, many of you think you're just that close. You're just that close to profitability. You're not probably just that close yet, because you're doing things that are incorrect. And what you have to understand is, what is trading? What really is this business? It's simply, guys, statistical probability. We use technical charts to gain an edge based off of fear and greed. And many of you aren't understanding that. And the other issue is, a lot of you out there, you're just tunnel visioned, focused on the chart. You have to focus on your mind as well. We're not all the same, okay? Everybody out there is a little bit different. So what works for one person may not work for you. Yes, we use similar charts and similar patterns, but within those charts and patterns, we're all a little bit different, right? You might manage differently than me, okay? You might use a different time frame than I use. You might take a couple more or a couple less trades than I take, all right? You have to understand your personality, your belief systems, and equate them to your trading. There is no boilerplate way to be a great trader. So today we're going to talk about all of those topics, because I'm seeing so many traders mess things up because they're not understanding who is actually trading, and you're not understanding why you do what you do. So recognition is number one. Understanding is number two, and then the education, and then the making a difference part, where you study and get better. And then number four on all this, guys, consequence. You have consequence everywhere else in life, and I'm going to talk about that in the lecture. You don't speed on the highway because, well, you don't want to get a speeding ticket. You don't drink and drive because it's dangerous and you might get put in jail. You don't show up late to work, because your boss is going to fire you. What is your consequence in trading? Who is holding you accountable for your actions in trading? Probably nobody, right? Nobody. So guess what? You give yourself a really long leash, and you keep stepping on the line. You keep pushing the line back and pushing it back. Oh, I'll be better tomorrow. I'll be better next week. No, you're not. You're not going to be better, because there's nobody holding you accountable, because there's no consequence system. And trust me, if you mess up and lose all your money, nobody. That's how many people care. Maybe you care. Nobody else does. The market will keep moving on the next day, and nobody cares about you. So today we're going to talk about fear-based trading and how you can be a better trader by understanding your personality and understanding the process that you need to go through to be a better trader. All right, so I'm Jared Wesley of Live Traders. If you like this video, please click the like button. As always, hammer that subscribe button. Guys, this is an awesome channel. We talk about a lot of great stuff. All right, Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is fear-based trading. There's not as many charts this week, because last week we did pretty much entirely all charts. So this week we're going to talk a little bit about psychology. I've been getting a lot of requests recently to talk a little bit about emotions and psychology and trading, and it's not something that I haven't talked about in a little while. We've certainly done lectures on it in the past. But I think this week's will be interesting for you guys. There are a few charts, because you need to relate emotions to charts sometimes. But we're going to kind of dig deep a little bit inside your heads today and figure out, at least to some extent, why you're doing what you're doing. Today's lecture might be a little bit shorter because this is a topic we could literally spend a day or two on. But I think today's lecture will be slightly shorter than normal, but it's a good topic nonetheless. But before we do that, we need to do, when will the insanity stop? And this week, we actually had nothing. Truth. Nobody sent me anything. I didn't find anything. So I'm going to go out on a limb here and say that maybe, just maybe, there was less insanity this past week. I can't say the insanity actually stopped. It just wasn't brought to my attention. It's probably a better way to put it. I know, I couldn't believe it myself. No insanity this week, or at least, like I said, I didn't see any. You guys have to understand, I don't go out and search for this stuff. Like, people usually send it to me, or I come across it from comments online or in the chat room. And so it is what it is, guys. Sorry to disappoint. But when you think about it this way. You're disappointed because people are doing the right thing. Oh my goodness, that's not a good look, is it? Okay, that's not a good look. So anyway, let's dig in, guys. Okay, so this week's topic, fear-based trading, which I think is important because I think a lot of you out there, and you're not even realizing or recognizing it, are fear-based traders. And I'll admit, I'm one of them. I trade off of fear sometimes, or I should say make decisions based off of fear. We just don't necessarily call it fear in the moment, right? But that fear of loss, that hope for gain, you're in a trade that's moving higher and you're like, I don't want to give back those profits. So you try to justify those things, but really it's just fear, right? You're just the fear of giving up what you've gained, or the fear of that green trade turning red, et cetera, and so forth. So there are a lot of reasons for this, and that's what we're going to talk a little bit about today, is fear-based trading, okay? So ask yourself, all right, this is rhetorical. Aren't you tired of losing money or breaking even? I mean, do you like how it feels to lose money and make the same mistake over and over and over and over and over again? It's pretty frustrating, right? Selling too soon, over trading, not taking stops, fear of pushing the button. That's one I'm getting a little bit more frequently here. People that are just scared to take a trade. So understanding the reasons behind this are important, but I think there's a lot of people that are in this position where they think they're so close. I'm right on the edge. I'm right on the precipice of making so much money here. But you can't correct a mistake. And I think one of the reasons, and we're going to dig more into the emotional side of this also, but I think you have to recognize and really at least admit that part of the reason, maybe a large part of the reason you do what you do, is not necessarily your belief system, which we'll talk about, not always your mind or your mental approach. It's also the lack of oversight. Right? There's no oversight in trading. Nobody's looking at what you're doing, so there's no consequence to your actions. And I've talked about this topic before, and it's not the main theme today, but the idea that in life, and this is in all aspects of life, okay, we like to think, okay, let me change direction. We like to think we're just good people, right? We do. We all like to think, oh, I'm a good person. What do you mean? I'm a good person. No, you're not. I mean, you might be, don't get me wrong, but why don't you speed on the highway, or why don't you, take a couple bucks out of that tip jar at a restaurant, right? Well, because the consequence, right? Sure, there are times we do things on principle, all right? And that's a good thing. We teach our kids why it's important not to lie. We teach our kids why it's important not to steal, right? Why it's important not to cheat. This is what we teach our children, because that's the ideal human being. We are not ideal human beings, okay? We're flawed. All of us are flawed in some capacity. And I think you guys underestimate just not only how flawed you are, but the capacity of consequence in life. You do what you do most of the time because the consequence of stepping out of those boundaries is significant, right? You don't want to lose money. You don't want to go to jail. You don't want your spouse to leave you, okay? But in trading, you don't have any of those things. Now, you may have an overbearing spouse in trading. I don't know. But it's just you, the monitor, and some walls, and nobody's listening. So you do things that you wouldn't normally do because there's nobody to hold you accountable. I mean, accountability is what life is all about, isn't it? We hold our kids accountable. Our bosses hold us accountable, right? Law enforcement holds you accountable when they're not defunded, right? I mean, all of these things are really important. You don't have any of them in trading. None of them. So it's a big issue here. Not to belabor that point, it's just a very big issue. So you got to ask yourself, what were the reasons? Why did I become a trader? Was it to make money? Was it freedom? Was it time? And then ask, am I accomplishing any of those goals? Am I making money? Do I have the freedom? Do I have the time? Meaning, if you're not making money, my guess is the freedom and the time are also not there because you probably have a second job or a main job and trading's your second job. I don't know, which is fine. There's nothing wrong with that. It's just that you haven't reached your goals because of these things up here, because you're making the same mistake many, many, many times over. And I want you to think about that for a second, because in most aspects of life, you're not allowed to make the same mistake more than a couple few times. And I'm not talking about little mistakes. I'm talking about significant mistakes. How many times can you get caught drinking and driving before they lock you up for a long time? Not that many. Right? How many times can you show up to work without calling or telling your boss before they fire you? Not that many. Okay? How many times can you get caught speeding at 100 miles an hour on the highway before they send you to jail? Not that many. But how many times do you make the same trades and make the same mistake, whether it's your entry mistake, whether it's your exit mistake, whether it's not taking a stop loss mistake? Think about it. How many times do you make the same mistake in trading that you would never make in other aspects of your life that many times? It's because you don't have any consequence, or the consequence isn't severe enough to keep you from making the same mistake again and again and again and again. And I'm speaking this way because I've done the same things. I've made mistakes, the same mistake in trading well over 100 times, certain things. Okay? So you ask yourself, why did I become a trader, and am I getting closer to those reasons? Meaning, am I getting closer to making money? Am I stagnant? Am I getting further away? Am I getting closer to the freedom and the time and the flexibility? Or am I getting further away? So you ask yourself, if not, then why? Why aren't those things happening for me? Okay? So a lot of it is based upon fear and self-doubt. You don't think of it that way. That's the problem. Are you a fear-based trader full of self-doubt? Now, again, you're not sitting there going, I'm not doubtful, Jared. I'm a confident A-type personality, alpha male, right? But you're still selling for a nickel when the target's 50 cents. You have self-doubt. You absolutely have self-doubt. You took a trade that you believed in, and then 10 seconds into the trade, you're starting to clip some shares and get out because you don't believe it's going to hit target. Because if you had full belief, you wouldn't even think about clipping off some of those shares, right? If you truly believed a stop loss was positive, meaning it was helpful, and that's why we have them in our trading plans, you wouldn't ever think about not taking it. You have some self-doubt. The self-doubt is a stop loss really beneficial? That's the doubt. And then ego flips it on you and says, well, I'm so good that I know this trade's going to come back. And therefore, I don't need to take my stop loss. So then you're really tongue-tied and twisted. Too much confidence combined with self-doubt's actually pretty dangerous in trading, okay? So is your fear of loss stronger than your hope for gain? And does this fear compromise your capacity to trade profitably? Yes. The answer is yes. If you're not sure what the answer is, it's yes, okay? If you are sure what the answer is, it's still yes. If you're saying no, the answer is still yes, okay? It's yes. Because everybody goes through this at some point, all right? So if your fear of loss is stronger than your hope for gain and it compromises your capacity to trade profitably, what are your choices? What are your options? You could quit, right? You could quit. Market doesn't care. I don't care. Nobody cares. The only person it affects is you. Let's be honest. Nobody cares. I mean, you could lose $1 billion in a market and you're just absorbed and doesn't even know it happened. So there's even really nobody to even care about you. You could continue to trade and lose money, or maybe, just maybe, you could take a long, hard look at what you do and why you're doing it. And then possibly, after doing so, think, maybe I can fix this. Unfortunately, lines 1 and 2 are where most people end up. They either quit through attrition, or they continue to trade and lose, and then quit through attrition. Okay? So it's the same thing. They basically get to a point where they throw their hands up and say, enough, I'm done. Because they were never able to look at themselves objectively enough to make change. Now, don't get me wrong. There's a small percentage of people that look at themselves objectively enough, honestly objectively enough, and go, this isn't for me. I'm not that person, and I don't think I'll ever be good at this, and I'm going to quit. And that's okay, as long as you're doing it objectively. And the reason I'm telling you guys this is because most people, all of us, including myself, we have a high opinion of ourselves. There are times we feel like we're being objective and we feel like we're right when we're not really right. Our perception is incorrect, but our perception becomes our reality. Okay? So have another person kind of oversee your trading, record your trading, videotape your trading. Go back and look at how you react to situations. And I don't mean just videotape the screen. I mean record your face and the screen, and kind of play it back. And you'll start to see tendencies and patterns when you're in a losing trade versus when you're in a winning trade. Okay? But you have to make a decision here. Am I going to be honest and objective, or am I just going to keep doing what I'm doing, losing money, and you'll keep getting what you've always gotten because you're lying to yourself? You're lying to yourself, okay? So until you overcome those fears, or at least manage those fears, your potential as a trader won't be realized. So the problem and the solution is with you. You are the problem, but you're also the solution. And this in lies the problem, okay? And what I mean by this in lies the problem is you don't have a boss that's going to sit there and reprimand you. You don't have a boss that says, if you do it one more time, I will fire you. So you're going to shape up probably because you want to feed your family and pay the mortgage or whatever. Nobody's going to tell you that in trading. The market doesn't even care. That's why the solution is much more challenging, okay? So we go to a chart, one of the very few that's in here today, okay? And you look at this and go, wow, okay. Little consolidation here. The stock is stalling at the $89 area. Pivot here, pivot here, pivot here, pivot here. Boom! Wide range igniting bar takes out all the pivots. Narrow range resting bar with a nice little bottoming tail in the upper 50% of the range. Beautiful. Wow. Get into your 3-bar play right here. Rip. Nice, right? Wow. $1 gain almost in 30 minutes. So you get down here. Charts excite people. But they don't really make you money. You make you money or lose money. And this is what people don't get. You guys all think the chart matters, and it does to some extent. But what's between your ears matters far more than the chart. How are you going to handle the chart when it does X or Y? How are you going to handle the chart when a wide range green bar comes in? Are you going to dump all your shares on that bar? How are you going to handle the chart if you got into this and a wide range red bar came in? How are you going to handle it? Are you going to get out where you're supposed to, or are you going to let it go against you? The chart doesn't matter, you matter. And most people aren't spending enough time on themselves correcting their own emotional and personal mistakes. They're sitting here trying to find better patterns. Don't get me wrong, finding better patterns is great. Nothing wrong with finding better patterns. But who cares how good the pattern is if you haven't fixed what's wrong with you yet? Right? If you haven't done that, right? Okay? So charts excite people, but they don't make you the money. Wow, look at that beautiful 3-bar play. $1 in 15 minutes, incredible, right? We talk about this every day in the chat room. Where and even when to enter the trades. So why aren't 100% of the people in there profitable, right? Anyone can show you a winning chart after the fact, especially, right? But that doesn't mean you're going to make money from it. Only you can control how much or how little you make, all right? And this is the part that you guys are really struggling with, because a lot of people out there are thinking this is the only way to trade, or there's a boilerplate way to trade. Sure, there are basics, fundamental basics, core basics that we all should know as traders. There's a lot of different ways to manage a trade. There's a lot of different patterns to take. There's a lot of different styles and time frames to trade on. But none of them matter without understanding yourself first. Because this is really what most of you actually need, okay? This is what most of you actually need. It's a stress reduction kit, okay? You just place it on a very hard, firm surface, all right? Follow the directions in the circle. It's pretty simple, straightforward. Bang head here and repeat step 2 as necessary or until unconscious. If unconscious, cease stress reduction activity. Because you would be better off. No, I'm not being mean what I'm about to say. Most of you would be better off if you were unconscious. You would be, because you F up your trading so bad it's pathetic. You come into the day calm and level-headed. Maybe you have a plan. Maybe you don't. Okay? And then as soon as the market opens, everything goes to shit. And I don't mean the charts go to shit. Your brain goes mentally insane. You lost all of that balance, calmness, objectivity that you had before 9:30. The bell rings, ding, 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 and it's like throwing a steak to a pit bull or a lion. Everything goes out the window. You become tunnel visioned. Salivating. Oh my gosh, I gotta buy Tesla on a 10-second high. But you said to yourself, I'm gonna wait at least 5 minutes to trade today. Throw it out the window. It all comes down to your emotions. Why do you do what you do? And this is the part you're not working on. Why do you do what you do? Well, people have that gambler's mentality, I suppose. Trading is just a systematic way to make money, and we make that money using technical charts. That's all it is. It's no different than any other job in the world. You have a product, you sell the product. Well, you have a chart, you trade the chart. But most of you could probably use a stress reduction kit, because the stuff that you do, you'd be better being unconscious. Okay? So, ask yourself, what do my actions tell me about my beliefs? Seriously, now not what your beliefs tell you about your actions, vice versa. Step back. Seriously, step back and ask yourself, not what I think happened, what did you actually do? You hear that phrase, actions speak louder than words? I don't care what you say, show me what you do. Don't care what you say, show me what you do. Okay? Selling too soon. Not taking a stop, over trading, inconsistent risk level, not following your plan. Your actions actually give you a very, very clear picture of who's trading. You're just not listening because you're making excuses for yourself. We've all done it, right? I mean, when you get caught in a lie, what do? You lie more. Die with the lie. The only difference here is you're not lying to somebody else to save face. You're lying to yourself to save ego. That's a problem because nobody else is listening. Lying to somebody else is fine because maybe they'll tell the whole world. And now you don't want that. But lying to yourself, that's a whole nother level of lies. And if you continue to do it, you're never going to be a good trader. So how can we alter our beliefs so that they'll help us achieve success in trading? Or how can we understand our beliefs better so we can alter our trading to coincide with our beliefs? Beliefs are challenging to change, right? You know the phrase, leopards don't change their spots. They don't. Okay? They don't. They might flex, but true, real change is rare. So maybe we accept who we are and work on making us better. Accept it. Say, I really do have a self-doubt problem. I really do have a problem taking stop losses. And then try to make your plan in a way that will help maximize your strengths and minimize your gains. Because I use the analogy with Mike Tyson's Punch-Out, which most of you don't even know because you're so young these days, but you don't start with Mike Tyson in that video game. You start with Glass Joe. I mentioned this last week because you're not ready for Mike yet. So your trading's not ready for the big time yet either. The reason I'm commenting on this, guys, is because I can't think of, and maybe you guys can, all right? Maybe you guys can. I can't think of really any other business in life that you play with the pros from day one with zero prior experience. Tell me I'm wrong. You don't just go get a job as an investment banker at Goldman Sachs. You go to college for 4 years, then you go through the Goldman Sachs training program. You just don't become a crane operator. You go through an apprenticeship for 18 months, and then you're a crane operator, right? You just don't get a college diploma. You go through 4 years of that. You don't just become a chef at a 3-star Michelin restaurant. You work your way up. But in trading, you wake up one day and say, I want to be a trader, open up an account, and trust me when I tell you, the market is the best. It's the best. It's the Wilt Chamberlain. It's the Michael Jordan. And you're just literally from day one, that's who you're competing against. So why should you be good at it when you start? Why should you be good at it even after 3 to 6 months? There's nothing else in life you're a professional at in 6 months. There's nothing. So why is this different? This goes back to your belief systems. You came in believing that you could be great at this in 3 months, but why? Likely because some Google ad told you so. It's not realistic, okay? It's not realistic, okay? So ask yourself, and this is going to be helpful to altering those beliefs or trading within those beliefs. What is trading? Because if you don't understand what it is, it's going to be hard to be good at it. You got to understand what it is that we do. It's simply a systematic approach to making money in the stock market based off of technical chart patterns that exploit fear and greed. That is it. It is that simple. I didn't say it was easy, but it's that simple. Okay? It's like me saying, put the basketball in the net, in the hoop. It's that simple, but it's not easy because there's a guard in front of you. There's other teammates to watch out for. Trading's the same way. So it's simple. It's just not easy. The technical charts we use, they're based off of statistical probability. But the problem that many of you have is you're not consistent. So the statistics don't work for you because you do this on one trade and that on another trade. And then on a third trade, something completely different. So you're going to need consistent trade types, times, and patterns, consistent risk level, consistent management, consistent money management rules. Does that mean that's the best way for every single trade? No. Some trades you're going to get into and you're going to go, this is not going to work because the volume spike, the bottoming tail, all that other stuff. But you're still going to hang on and take your stop because your goal is to be consistent. And then as you gain experience, you can add other rules, right? More rules to your trading plan because you've gained more experience and you've proven that you have more control over your trading. But you have to have a baseline first. So to be consistent, it takes massive amounts of discipline. Without this discipline, it's nearly impossible to succeed. And it's why most people fail. Because let's be honest, knowing the right thing to do and actually doing it aren't the same thing. Most of you know the right thing to do. Now, some of you brand new traders, you don't. You're buying stocks that are up 8 bars in a row. And you're just doing lots of stupid stuff, which is what people that are new do. And this is why you go to college for 4 years to get the stupid out of your system. Let's be honest. You've done some stupid shit in college, haven't you? Yup. If you're not nodding your head, yup, then you were one of those boring kids in the corner in college. Otherwise, you did a lot of stupid stuff in college. And then you took 4 years of that stupid to get it out of your system. And then you go work for a big firm or corporate America or whatever you want to call it. And what's the first thing they do? Put you through training because they don't trust the stupid in you in 4 years of college. They want to see what you're really like at their firm, at their company. You don't get to do that in trading. You just jump in with the big boys from day one. And you all think you're going to get there with no prior experience, no education, no nothing. Because you know better. You know, because you went to Harvard and you know better. Good luck with that. Tell me how it goes for you, okay? All right? So don't make excuses. The market is what it is. Some trades work, some don't. But the odds are always in your favor if you follow the rules. Otherwise, just don't even trade. Just quit the business. If you can't understand this slide, what trading really is, and remember, actions speak louder than words. So don't tell me that you believe this and then do the opposite of this. Don't tell me you believe a stop loss is valuable when you don't take your stop losses. Don't tell me that being consistent is a good thing when every other trade you take is completely different than the next. Don't tell me all that stuff. Just show me. This is the problem. You don't have anybody that's holding you accountable. So you're twisting your head sideways, looking up, looking down, upside down, and you'll make that trade that looks nothing like another trade look the same to you. How many times in the chat room or online do I say, that's not a 3-bar play? It's up 4 bars in a row. The first damn line of a 3-bar play is it must be a wide range igniting bar. Wide range igniting bar means first or second bar of a non-extended move. It's the first damn line of a 3-bar play. I've gotten that comment more times than maybe any other comment ever made to me. Jared, check out this 3-bar play. It's up 5 bars. You missed the first damn line. You're lying to yourself. You don't have a checklist. You're not consistent. Your emotions that oh my gosh, it's up 4 bars. It's so green. I got to get in before it gets more green. And then as soon as you get in, what happens? Self-doubt. Ask yourself if those things are true for you. But you're never going to be a great trader if you don't fully understand or respect what trading actually really is. It's just a systematic approach to making money in the stock market based off of technical chart patterns that exploit fear and greed. That's all it is. Robotic indifference is the goal. I'm not saying it's an easy goal, but that's the goal. So, how do we overcome these demons or deficiencies? That's the $64,000 question. How do we overcome this crap that we put ourselves through? Simple. Through understanding, practice, and consequence. Understanding, well, why am I doing what I do? First, I should say recognition. I really should say recognition. You first have to recognize what it is that you're doing, right? Recognize that you're not following the rules, or you don't have any rules, or you're selling too soon, or you're not taking stop losses, or you're over trading, or you're risking too much money. Recognize. Then understand, why is it that I do those things? Why do I do those things? What's the cause behind it? And that might be a challenge. It might take you several months, maybe longer, to realize, why am I doing it? Usually it's some form of your fear of loss is stronger than your hope for gain, some form of ego, some form of the need to be right. Usually one of those things. Then, after you recognize, after you understand, then it's time for practice, repetition, education. Basically, work on improving. Work on making necessary adjustments. So, think about it. Understand why. Got it. Well, let's check. Recognize. Good. Understand. Check. Work on making improvements. But then, how do we actually make sure we're making the necessary changes? How do we make sure the action meets the word? You know the word. I got to do this. I know the action, but how do I make sure the action actually happens? That's called consequence. If there are no consequences to bad actions, you won't change. Make your consequences for incorrect actions severe. I'm going to get all the people out there going, Jared, don't go political on me. Guys, 6 blocks of Seattle was taken over for 2 weeks. Why? Because there was no consequence for that action. It was illegal, but there was no consequence for illegal action. I can give you 100 examples. That's not the point. Okay? 100 days, whatever it was. It doesn't matter whether it's 6 blocks of Seattle, whether it's stealing a stick of gum from a store, doing 110 on the highway, taking some kid's lunch money. If there is no consequence for bad action, you won't change. I know you think you're a good person, and I know you think you're Mother Teresa, but you're not going to change unless there's some form of consequence to force you to change. And this is what I meant earlier when I said humans really aren't as good as you think you are, or we think we are. We're not. We live in a construct of society, and consequence is what keeps us inside the lines. It is. Trading is no different, okay? Trading is no different. So if you don't have some form of consequence, you won't change, trust it. You won't. So make those consequences extremely severe. Severe enough you wouldn't ever want to make that mistake again. And then find a person that holds you accountable to that. It's one thing to have a consequence, but again, if there's nobody to hold you accountable for the consequence, so what? So, you will only change when the pain to stay the same becomes greater than the pain to change. I put anonymous because some people attribute this quote to Tony Robbins and other people, The quote they use is slightly different, and I'm not sure that he came up with it himself because it's been out for a lot longer than Tony Robbins has been alive. The point simply, though, is who cares who said it? It's true. You will only change when the pain to stay the same becomes greater than the pain to make a change. And if you never get to that point, then you won't change. You'll just quit. And that's what a lot of traders do. They quit and then they bark at other people online going, oh, you want to be a trader? I tried that once. No, you didn't. You hacked at it for a little while, but you didn't really try it the way it's supposed to be done. Entry, stop, target, good money management, good trade management, consequence for your action. You came in with 100K, threw it all at a couple few trades, lost half your money, thought, oh, I'll get it back by tripling my risk, and then you lost it all. Am I speaking to you? Yeah. A lot of people are in that position. You didn't come about this the right way because you didn't understand what the business is all about, which means there's no way you could have done it the right way. All right? So ask yourself, how does it feel? Take your buy setup entry at 49.82, your stop loss, you get into the trade, you sell it right on that first wide range bar. You sell it here and then it goes to what? Here. Watching it go to here. How's that feel? Especially if you broke your plan. How's that feel? You know how it feels because I get the comments in the chat room every damn day. I got out of XYZ for $300. Now it's up $3,000. The only comment I make in return to that is, did you follow the rules of your plan? If the answer is yes, then shut up and move on. If the answer is no, then ask yourself why you didn't. It's that simple. Did you follow the rules of your plan or not? If you did, great. Pat on the back, next. If you didn't, why not? Because this happens to traders all the time. All the time. Because they're letting their emotions trade for them. Right? What's that line in Top Gun? Your body's writing, your ego's writing checks your body can't cash. Yeah. And then the flip side of all that is idiots like this. I will get rich or die trying. Well, you're not going to die. You're just going to get poor. Neither one of these is true. You're not going to get rich and you're not going to die. You're just going to be broke. Completely and utterly misguided. Cool. And then you get to tell all your family and friends that you tried trading and it's a BS career. Because you didn't go about it the right way. And you didn't even know you weren't going about it the right way because you probably watched some Google ad where some idiot turned $500 into $2 million. 98% loss this week. 98.61% this week. Minus $59,761. This really happens. This isn't photoshopped. Somebody did this shit. Investing, minus 57% this week. My goodness, look at that chart. Look at this person. Chopping around break even, boom. Like the Titanic smacking them on the head. Natural selection at work. I love it. You guys don't like it when I make the comment. And it's true. I know why the 1% are the 1%. Because they're the 1%. You guys don't like it. But it's true. Just people watch. Go sit at a park and people watch. Go to a restaurant and listen at tables around you. Watch TV and see some of the stupid shit people do. The average person is not terribly bright. And they do really silly things. And then worse is when you have really smart people doing really silly things. Because why, guys? Let's take it down. Let's strip the onion back. Let's peel the onion. Because most people are overly emotional and completely and utterly unobjective. You do something wrong, you play the blame game. This is not even anything to do with trading, but it has a lot to do with trading. You do something wrong, you play the blame game. It's not my fault, it's so-and-so's fault. You hired that person, it's your fault. You thought that person would do a good job. You hired them. They messed up the job. Sure, it's their fault for messing up the job. It's your fault for hiring them. Take the blame. Put it on you. Because if you accept it, you can change it. If you don't accept it, you can't change it. Everybody wants to be a victim nowadays. And in trading, it's very common. Victim mentality gets you nowhere in life, and it certainly won't get you anywhere in trading. What's this person going to do who lost 98%? Blame the market? Probably blame Jim Cramer or some news report for coming out. I've seen traders do that. Some silly news report came out on that biotech stock that was like a 20-cent penny stock, and it tanked. Okay, why are you trading 20-cent penny stocks with news? You guys have to understand that this isn't BS. This is how it really happens. You just don't think it's you that this applies to, but it really is you. You just haven't come to the point of recognition yet, right? You know, that first step in DABDA is denial. A lot of traders are in it, denial. Okay, this one you guys have seen, shown it many times. This is your daily 3-bar play. Rips, maybe you get out too soon. Maybe you don't. And then you're still riding it all the way down to $10. Oh, it'll come back up. There's no way that it's coming. You know, this is just some silly news report. This will be a bottoming tail. Yeah, people really do this stuff. They hold stuff way past where they're supposed to. So keep asking yourself, are my actions suggesting that my words are meaningless? I believe stops are good, but I didn't take my stop. Well, the action is all that mattered because the action is what cost you money. In this case, your belief wasn't an accurate belief because you didn't follow your belief. You'd follow it if you believed it to be true. Right? And this goes for a lot of stuff in life. Okay? But in trading, the consequence is a lot. We just saw it. I'll go back one more time just for fun. It's not funny, but just for fun. People really do this stuff. And I know some of you guys say, oh, well, that happens all the time on Wall Street Bets or Robin. No. It happens to a lot of people on a lot of different trading platforms. Interactive brokers, trade stages. Somebody out there today on Interactive Brokers is losing $100,000 or more. Guaranteed. Bet my life on it. Some client at Interactive Brokers is getting hammered today for being stupid. Some client at Trade Stations getting hammered today for being stupid. Some client at Fidelity is getting hammered today for being stupid. Thousands of people out there this is happening to. Remember the comment I make? To succeed, you first have to last. How do you last? By doing stupid stuff like this. It goes back to recognition. Putting some level of consequence to your actions. Okay? So, how do we overcome them? Repeat. Recognition, understanding. Practice, repetition, education. Work on improving and make sure there's a level of consequence. Because without it, so what? It's like a parent telling their kid, you know, if you draw on the walls, again, my 4-year-old did this is why I'm using that 5 walls to be specific. If you draw on the wall again, you're going to get grounded or you're going to spank your butt. Well, if they draw on the wall and you don't reprimand them, so what? You know what the correct action is, but you're not following through because there's no consequence. Have the consequence. Okay? So, it comes down to know the importance of a trading plan, right? This is an overview of a good trader. You know the importance of building a trading plan. You have guidelines on how to build that successful trading plan. Okay? You understand the importance of scanning and how to do it successfully. Again, guidelines and parameters, which are in your trading plan. You're going to note a lot of this comes back to having a trading plan. You constantly evaluate why you are or you aren't making money. Obviously, the real reasons. Why am I really doing this? Not, oh, I'll fix it tomorrow. How many of you guys do that? I messed up today, but I'll be better tomorrow. How many of you out there hate weekends? I want to trade on Saturday and Sunday. I wish the market was open 7 days a week. Too many of you. You should be praying for weekends. Give yourself a break from a business that can be stressful at times. You mess up on Friday, what happens? Your whole weekend sucks. You kill it and crush it. Make a ton of money on Friday. You're floating through silk on cloud 9 Saturday and Sunday. Yep, I'm speaking to you. And you guys want to know how I'm inside your head so much? Because I used to do the same shit all the time. I used to get a couple hours of reprieve when the Eagles were on. Well, that didn't work because they usually lose, but that's not the point. You get a few hours on Sunday football and be like, all right. And then you go back to being depressed all weekend because Friday was a bad day. But if Friday was a good day, you're out there just hopping your step. Or make money Monday through Thursday, give it all back Friday. Or lose money Monday and take Tuesday to Friday just to get back to break even. Man, oh man. A lot of traders are in that position. So you have to be honest with yourself. What's the real reason? Why did I do what I did? And how can I stop from doing it again in the future? So to do so, you're going to have to do a post-market review, a follow-up, print out your trades, mark up those charts. Why did I do that? How did I do that? Do I even recognize that pattern? I've had that happen. I still have it happen now. I'll go back and look at a chart and I'll be like, where was the pattern again? What did I see in the moment that I'm not seeing in hindsight? Because usually hindsight's easier to see the pattern. But there are times you print off a chart and you're like, yeah, I'm not seeing that one. Why did I take the trade? FOMO maybe? I got to fix that. Apply good money management and trade management as it relates to your personality. Objectively manages expectation. Oh my goodness gracious. This one, 99% of traders fail at. You have expectations that are so far out of line with reality, it's not even funny. You want to be the next LeBron James in 3 to 6 months. It's not happening. It's not. I don't care what school you went to or how smart or how dumb you are. It's not happening. Use a trading journal, track your trades, maximize your strengths, minimize your weakness. But to do that, you have to recognize what those strengths and weaknesses are objectively. Backtest new strategies to refine your approach. Put the time in. Put the time in. And that time isn't always about looking at charts. It's not always about that. It's about looking at some of your statistics and go, man, I see a consistent pattern here. I'm not taking my stops. Or I'm selling too soon. Or, man, I'm averaging 27 trades a day. Why am I taking so many trades? So you got to ask yourself why you do those things. You know on paper what the right thing to do is. But clearly the plan you have in place is not conducive enough to your personality for you to actually be able to follow it. And of course, there's half the traders that just don't have any of this. They're winging it. I'm shocked at how many traders I see out there that have no experience, no education. They're trading off their cell phone, their iPhone. Literally. Yeah, I'm on a 2-minute chart, 1-minute chart off my phone. Really? I'm not saying you can't trade off your phone for certain styles of trading, but not for that one. So these are traits of a good trader, a successful trader. How many of you actually do these things? Or should you just go back and buy a stress reduction kit? They're cheap. You can make one yourself. Just make sure you make the center there big enough so you can hit the bullseye. So trading is a pretty serious game, right? Pretty serious gig. And you guys all want it for the things we talked about. Freedom, flexibility, time. Because this is the irony, and I'll end on this. This is the irony. You guys, I'm laughing because it's just so, it's such a human thing, okay? This is the irony. You guys all want to be great traders and make money because you don't want a boss telling you what to do. But yet it's that boss that makes you the person and successful person you are. They don't make the person, they help guide you and hold your hand. Think about what I just said. You all want to get out of trading because you don't want your boss telling you when you have to show up, when you have to go home, your Saturday morning TPS reports. That's why you want to get out of that. You don't want corporate America. I don't like the corporate structure. Human resources said I can't say crap in the office anymore. You want to get away from all that. But trading gives you the opportunity to get away from all that. And what is the first thing you do? Everything you're not allowed to do at the office. And all those things that you're not allowed to do at the office, The reason you can't do them is because they're unproductive and they lose the company money. So your boss is the one keeping you productive. And as soon as you shed your boss, you shed your productivity. Damn. Eye-opening, isn't it? Until you learn to be your own boss with real consequences, you'll never be a good trader. So think about what I just said. You want away from all that stuff without the recognition that all those things that you're complaining about are the same things that help keep you productive. So you're going to have to find a way to take the good in what your boss tells you and apply it to your trading and your life, and take the bad and shed that. Okay? Sometimes you're smarter and better than your boss, somebody said. Well, if that's true, then you'd all be great traders as soon as you open up your trading account. Right? Your boss is likely your boss. Sure, there's exceptions because they know better than you. Sometimes that's not true. But I love how everybody complains about the person above them. I should have got that position. It was my job, my promotion. Well, you didn't get it for whatever reason. And if you're so damn good, why don't you own the company? Jared, stop. I can't handle the objectivity and the truth. Well, if you're that goddamn good, own the company. Think about it. Well, if you're in the 1%, why aren't you in the 1/10%? Right? Because you're not as good as you think you are. You might be very good. I'm not saying you're not necessarily very good. And this is to everybody. But you're not as good as you think you are. We never are. We very rarely ever are. Which means there's always room for improvement. Okay? All right. That's going to do it, guys, for this week's lecture. Like I said, I can go off on tangents and talk about emotions and psychology forever and ever and ever and ever. I literally, years ago, I had a course that was literally just a psychology course. It was like 150 pages of psychology. And people fall asleep after a while. But this stuff is important. So go back in closing and find out why it is you do what you do. And then put such a nasty, severe consequence on it that you would never think about not doing it. Right? You wouldn't ever think about not doing it. All right? So that will do it for this week's lecture. Hope you guys enjoyed that. Hope you took a little bit something from it. We'll get back at it again next week.